Welcome in this video, ZBCN vs XLM, which is better. Can ZBCN do 41x? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the current technical structure, it is clearly observable that the price has been moving sideways within a specific range for some time. Such horizontal channel formations indicate that investors are making buy and sell decisions within defined limits, and that the balance between supply and demand has not yet shifted in a clear direction. In these types of formations, support and resistance levels become more apparent, and the reactions from these levels offer important clues for investors. Currently, the price seems to have touched the midline of this horizontal channel and started an upward movement after receiving support there. The midline often acts as both support and resistance, so a bounce from this level is a positive technical signal. These kinds of movements are extremely valuable in understanding short-term market dynamics. Bounces from the midline typically show a desire for the price to move toward the upper band, which may signal that buyers are re-entering the market. At this point, the likelihood of the upper band being tested increases. If momentum continues strongly and volume rises in support, the price's journey toward the upper band could accelerate. Especially if this upward movement is supported by a specific catalyst, positive news flow, or favorable technical indicators, reaching the upper limit of the channel may be just a matter of time. Although horizontal channels may appear to signal an indecisive market, these structures are actually important because they often serve as early indicators of major price movements. Particularly as the price approaches the upper band, investors should be more cautious and alert. In the past, these levels have seen strong selling pressure, leading to price rejection. However, if a different scenario plays out this time and the price breaks the upper band with strength and maintains its position above it, this can be considered a breakout, potentially ushering in a new upward trend. In this context, the movement toward the upper band can be interpreted not just as a bounce within the channel, but also as a possible breakout setup. At this stage, investor psychology should also be taken into account. As the price approaches the upper band of the channel, past rejections at this level may cause a cautious atmosphere among many investors. This can lead to a drop in volume, profit-taking, and price stagnation at that level. However, on the other hand, if the price finds the strength to overcome these psychological and technical resistances, meaning buyers become dominant, then the likelihood of the price sailing to new highs becomes much more plausible. Such a breakout could signal the beginning of a new bullish wave, freeing the price from the constraints of the channel and allowing it to move within a broader range. The price bouncing from the midline also indicates that momentum is on the side of the buyers. These types of bounces typically signal trend continuation. So if the price has truly gained upward momentum, it may not just be a short-term reaction. Instead, the price may head toward the upper band with increasing speed. While the price currently appears to be moving in a balanced manner, this calm may be the calm before the storm. In horizontal channel formations, major price movements often follow these quiet periods. Therefore, investors should approach both technical levels and volume behavior with great attention, especially if an increase in volume is observed as the price nears the upper band. This could indicate growing investor appetite and preparation for an upward move. On the other hand, if volume decreases, caution is advised, as the price could be experiencing a false breakout. Such horizontal channel structures are also referred to as consolidation periods in technical analysis. These periods are known as accumulation phases in the market. In other words, the price rests within a certain range for a while, determines its direction, and then moves outside the channel to start a new trend. Currently, the price testing the midline and bouncing upward from it suggests that this consolidation process may be coming to an end and could be the precursor to a new directional move. Testing the upper band and subsequently breaking above it would confirm the end of the formation and the beginning of a bullish trend. Investors should watch these movements closely, as these structures often present favorable risk-to-reward opportunities. An investor who enters near the midline can place a stop loss close to the lower band to minimize risk and aim to profit from the move toward the upper band. These types of strategies are among the most frequently used in technical analysis and can yield highly effective results, especially in horizontal channel formations. As the price moves toward the upper band, each test of that level may weaken the resistance there. Selling pressure starts to decline, buyers gain strength, and this increases the likelihood of a breakout. In conclusion, the current move where the price bounces from the midline within the horizontal channel and heads toward the upper band is technically a positive development. Whether this movement continues should be evaluated along with the volume, momentum, and indicator signals mentioned above. If all these signals support the upward move, then a break of the upper band and the emergence of new highs becomes likely. However, caution is still necessary because the upper band has previously acted as strong resistance and may have caused price rejection. Therefore, the price breaking this level and maintaining its position above it is of critical importance. If this is successfully achieved, it could mark not only the end of the horizontal channel, but also the beginning of a new trend. But we can't make decisions based solely on the channel. Let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunics Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
One of the most frequently used technical analysis methods in the cryptocurrency market is the Elliott wave theory, which argues that wave formations are inherent in price movements. According to this theory, market movements never proceed in a straight line. Instead, they follow a certain rhythm and structure, moving in waves. In this context, it is clearly possible to observe the traces of this wave structure in the project we are currently monitoring. The current technical outlook suggests that we are in the second wave of this structure and are likely preparing to transition into the third wave. This could be a significant turning point for the price, as the theory predicts that third waves are typically the strongest, longest, and most decisive phases of price action. In the Elliott wave structure, the first wave begins with initial buying from investors, while the second wave represents the corrective phase following that upward movement. During this correction, investors reassess their positions. Some take profits, while others remain uncertain about the continuation of the market. Therefore, second waves generally reflect fear and uncertainty in the market. However, once the second wave ends and the third wave begins, prices usually start to move upward with significant momentum as the market becomes clearer in its direction. Investor confidence is renewed, buyer interest increases, and this becomes a strong catalyst that drives prices higher. At this point, Fibonacci extension levels are frequently used to estimate the potential targets of the third wave. In particular, the 1.618 and 2.272 levels are considered minimum and maximum boundaries that this wave could potentially reach. In technical analysis, these levels are predicted by comparing them with the length of previous waves. When we examine current price movements, it is possible to foresee that the correction following the previous rise is about to end, and the third wave that will begin thereafter could potentially rise to the 1.618 to 2.272 Fibonacci levels. Moreover, it's important to remember that by nature, third waves are often characterized by more sudden and sharp price movements. These kinds of strong rallies can often completely shift investor psychology. Candlestick closings and high-volume breakouts that confirm the end of the second wave can be clear indicators that the third wave has officially begun. In such a case, price movement not only reaches technical levels, but also captures the interest of a broader audience, triggering FOMO. This can pave the way for faster and steeper price climbs. Another important factor investors should consider when identifying the price targets of the third wave is the duration and magnitude of previous waves. If the first wave was sufficiently large and supported by volume, the third wave is often at least 1.618 times its size. This indicates that the price holds strong upward potential. Additionally, in technical analysis, the third wave is often considered the main driver of a trend. So if an asset is in a long-term bull market, the backbone of that market is usually the third wave. Therefore, the current second wave phase may actually represent the calm just before a major breakout. In light of all these analyses, the current price movements offer highly promising technical signals. Especially once the second wave correction concludes, the third wave that follows may present a much more voluminous, sharp, and determined upward move according to technical analysis theories. The initial target of this move could be a 61.8% extension based on Fibonacci levels, followed by a 127.2% rise. These levels are closely monitored by both technical traders and algorithmic systems, so it's likely that volume will increase as the price approaches these zones, which could further strengthen the third wave's momentum. Finally, in order for this entire technical structure to develop, investors need to remain patient and follow the technical confirmations without panicking.
Achieving success in technical analysis not only involves understanding whether we are in the right formations, but also requires the ability to anticipate when those formations will complete and in which direction price will move. The current price structure suggests we are nearing the end of the second wave and heading toward the third. If this analysis is confirmed, it could mean the start of a new bullish momentum in the market and a high probability of prices reaching their technical target levels. This could create a significant opportunity window for investors. It is extremely important that investors read the structure correctly, build their strategies accordingly, and stick to the discipline of technical analysis to make rational decisions. In doing so, both risks can be minimized and potential gains can be maximized.
This comparison between ZBCN coin and XLM coin presents highly interesting data in terms of both potential and current status. Although the journeys, visions, market acceptance, and technological infrastructures of these two projects are quite different, comparative analyses can be extremely valuable for investors when evaluating potential future movements. ZBCN is a relatively new and developing project, where XLM, or Stellar Lumens, is a well-established asset in the industry, known for its corporate partnerships and technological advancements. These differing histories and trajectories are among the most fundamental factors to consider when comparing the potential of the two assets. XLM was founded in 2014 by Jed McCaleb, one of the co-founders of Ripple, and aims to provide a decentralized payment infrastructure. Its primary goal is to enable low-cost and fast cross-border money transfers, especially serving the unbanked population. Over the years, it has made a name for itself through partnerships with major companies such as IBM and has established a place in the corporate world. XLM's market history, strong price movements, trading volume, user base, and community growth have secured its position in the crypto space. Considering all these factors, it's clear that a project must succeed on many different fronts to reach the level of XLM. On the other hand, ZBCN coin, although still a very new project, has recently attracted the attention of investors. The high volatility and potential gains typically seen in newly launched projects with low market caps make coins like ZBCN particularly appealing to smaller investors. However, factors such as being in the early development stage, roadmaps just being revealed, and limited real-world use cases may raise important sustainability concerns in the long term. From a technical standpoint, considering XLM's all-time high, ATH, that level is approximately 41 times higher than ZBCN's current price. If ZBCN coin were to reach the ATH level of XLM, it would theoretically represent an increase of over 4,000%. However, there are several key factors to be aware of here. For ZBCN to reach such a level, it must achieve significant progress not only technically, but also in terms of community building, technological infrastructure, adoption rates, and investor interest. XLM has reached its position through institutional agreements, regulatory compliance, and a long-built reputation. Therefore, for ZBCN to achieve similar success, it must improve not only in price, but also in transparency, ecosystem expansion, problem-solving capabilities, investor relations, user experience, tokenomics, and many other parameters. The potential for ZBCN coin to experience such a significant rise should not be interpreted as it being able to reach that level in a short period. Cryptocurrency markets are not only highly volatile, but also largely shaped by psychological and fundamental analysis factors. Developments along the project roadmap, investor confidence, community engagement, and overall market sentiment are the most influential elements in driving price growth. Since ZBCN is still in the early stages of its journey, reaching such levels will require substantial time and effort. While XLM took years to hit its ATH, it seems highly unlikely for ZBCN to get there much faster. That said, the potential offered by ZBCN is not to be underestimated. Its low market cap can offer substantial profit opportunities for early investors. If the team behind the project makes visionary moves, maintains a strong developer community, and keeps investors informed through regular communication, it can gradually earn trust and increase adoption. Furthermore, if it successfully integrates with new trends and use cases, it can position itself uniquely within the crypto space, making long-term value appreciation inevitable. The fact that ZBCN is still at an early stage is both a major advantage and a significant risk. It's an advantage because the upside potential is much greater. It's a risk because there are still many unknowns and underdeveloped areas. XLM, on the other hand, has already gone through this process, faced ups and downs, and has been tested in the market. Therefore, comparisons between XLM and ZBCN are generally shaped by forward-looking potential. For ZBCN to reach the price level of XLM's ATH, a substantial increase in market cap is required, something that can only be achieved through large-scale volume inflows, exchange listings, and growing investor confidence. In conclusion, if ZBCN coin manages to reach XLM's all-time high, it could theoretically increase by approximately 41 times its current price, representing a return of over 4,000%. However, reaching this target is very difficult because it requires progress not only in price, but also in project infrastructure, use cases, institutional agreements, adoption rates, and many other fundamental metrics. Therefore, ZBCN coin still has a long way to go to reach that point. That said, such potential can turn into significant opportunities over time for patient investors. However, when investing, one must be aware of the risks and pay attention not only to potential, but also to the current developments of the project. Although a 41x rise sounds exciting, reaching that point will not be easy. ZBCN still has a long road ahead, many obstacles to overcome, and at the same time, enormous potential. It may be difficult for ZBCN to replace XLM, but if it develops its project thoroughly, why not?
I wish you all a lot of profit. See you soon.